Hello, greetings, and welcome to Dividend Blasters. This is our 57th video, and our topic today is strategic dividend and growth ETF investing. Why you should invest in the ETF SMH. This is the VanEck Semiconductor ETF. First, disclaimer: I'm not your financial advisor, so what I say should not be taken as a financial advice. The purpose of this video is for information and education. It reflects my own personal opinions, my research, and that's all underpinned by my experience as an independent investor for more than 30 years. So I urge you, do your own research, do your own due diligence, and consult a financial advisor prior to making any financial decisions. So why a semiconductor ETF? We've been hearing a lot in the news for years, but particularly the last year, about the chip making industry, the chip design industry, let's just say semiconductors. They have been on a tear this year. We've seen this bull market surge in this market sector, and it's just been taken off like a rocket. We've seen NVIDIA, the graphical processing unit chip designer. We've heard a lot about Taiwan Semiconductor, which is considered really the premier fabricator of chips in the world. However, because of geopolitical reasons, some people are a little squeamish to invest, but it is considered really the premier fabricator. We've also seen Broadcom, ticker symbol AVGO, which has also taken off like a rocket. And let me say one thing about Broadcom. I own shares of Broadcom. They pay a wonderful dividend. Anyway, but why a semiconductor ETF? Because that has been where the growth is. The growth this past year has been around artificial intelligence and chip makers that are going to help power the computers and the software to drive artificial intelligence will benefit, and investors in those chips are going to benefit. So, why a semiconductor ETF? Because these stocks can be expensive, and I'm going to show you some examples. They can also be price volatile, up and down, up and down. So, investing in an ETF can do two things for you. It can mitigate some of that price volatility risk. It also can allow you entry into what many consider to be a price costly or expensive market sector and get some exposure at an affordable price. So that's why. So I'm going to show you just some examples of some of the leading uh, investments that one could make if they were not buying an ETF, but buying individual stocks in the chip making market sector. NVIDIA, currently selling for $455.72. These are as of yesterday, Friday, September 8th, the closing price. Taiwan Semiconductor, a little bit cheaper, $89. Advanced Micro Devices, $106. But you know what? We've seen AMD and NVIDIA go way, way up, and they have very high PE ratios. Broadcom, $857. So those are not cheap. Here's a few more. Texas Instruments, $164. That's not too bad. Qualcomm, $106. Not bad. ASML. This is actually very interesting. This is a company, I believe it's a Dutch company, and they manufacture equipment that develop and design chips. So it's the equipment that does the work. And $627 a share. Now, you know what? I am including Intel in here, and I've been very bearish on Intel, as have most of the globe for the last several years. But they've been coming up. That's interesting. So just kind of keep that in mind. I just wanted to share that. And I also want to just mention that Intel did cut their dividend last year by 67%. So I'm not a big fan of Intel these days, but they are part of this SMH ETF. And I will Get to that shortly. So just a few basics on SMH. SMH is the VanEck ETF Trust. It's an exchange traded fund launched and managed by VanEck Associates Corporation. The fund seeks to track the performance of the MVIS US Listed Semiconductor 25 Index. Use the full replication technique. So this index is specific to the chip making market, and there's 25 stocks that are in it. And I'm going to show you those shortly. They were formed on May 4th, 2000, and they are headquartered in the United States. So, what are they trading for? Well, they closed yesterday at $150.38. They pay one dividend, an annual dividend. It's a modest dividend. It's a 0.8% trending 12-month yield. That comes to about $1.20 a share. So let me just say this, and I am a dividend investor, but you wouldn't buy this for the dividend. You're buying this for the growth. That's why you're buying this ETF if you choose to. And a lot of the high-tech stocks, a lot of the chip making stocks, don't pay dividends, or they pay modest dividends. An exception, of course, is Broadcom. There's a few others. Qualcomm pays a good dividend. A lot of them don't pay dividends. NVIDIA pays a very modest dividend. Assets under management, 9.7 billion. So what you'll notice is that SMH is probably the largest ETF in the market sector. It really is 9.7 billion. But compared to other ETFs, like an S&P 500 ETF, they're tiny. And that's fine. But there are some drawbacks to going with a smaller ETF. You're going to have very likely a higher expense ratio, which is 0.35%. When you look at some of the S&P 500 expense ratios, you will see some of them at 0.03% or 0.06%. This is 0.35%, so it's going to be a little bit pricier. So it's a trade-off. It is a trade-off. You will pay more an administrative fee, but the presumption is you're going to get better returns, price returns. All right, let's press on. So what I'm showing you here is just a comparison for SMH, its price return and its total return. And the reason why I'm showing you this is that it's almost negligible. It is a little different. But in the 1 year time frame, you'll see price return is about 42%. Total return is 48%. And remember, total return is your price appreciation plus your dividends. Price return is just price appreciation. It does start to separate a little bit when you look at the 10-year time horizon. I'm looking at about 658%, and for a price return, and then for total return, 787%. So the further you go, then you start to see the snowball effect. But it's negligible in the shorter time horizons. So I just wanted to share that with you. And again, you're buying this for really the growth, the price appreciation. So let's do a comparison of SMH versus the S&P 500. And this really makes my point. I am looking at total return for SMH for 1 year, 45%. For the S&P 500, it's about 11%. Let's go to the 10-year time horizon. I'm looking at the lower panel. SMH, 787%. The S&P 500, 163%. So this is why you would, maybe tolerate that higher expense ratio. If you buy SMH, you want to get the higher growth. And that's really price appreciation. Any dividend you get is just a little bit of gravy. That's really what it is. So let's talk a little bit more about some basics of SMH. Let's look at the top 25 holdings. And it's really all of the holdings. It's replicates that index that I mentioned. There are 25 stocks in it. The most heavily weighted one is NVIDIA, which is a little bit under 20%. Then Taiwan Semiconductor, about 10.5%. Then Broadcom, which is about 5.32%. Then Lam Research. Then ASML, which is the manufacturer of the equipment that manufactures chips. Then, wow, look at this. Intel is in the number 6 position, 4.7%. Texas Instruments, Applied Materials, Advanced Micro Devices, which we've been hearing a lot about this year. They have been on a little bit of a price tear. Analog Devices. And then number 11, my friend on Twitter was asking about Qualcomm. Well, here they are. They are in the number 11 position at 4.35%. Then Micron Technologies, then Synopsys, then KLA, then Cadence Design Systems. Some of these are less familiar to most of us. Some of them are very familiar. We all really know the top 11, top 12, but then it starts to get a little bit murky. NXP Semiconductors, Microchip Technology, I'm very familiar with. Marvell, I'm very familiar with. On Semiconductor, that's a new one to me. ST Microelectronics, Monolith Power Systems, Skyworks Solutions, Teradyne. I am familiar with Teradyne. Qorvo, and then OLED or Universal Display. So those are the 25. And you see, really, when you start to get past 20, they start to get less than 1%. What's really moving this ETF price-wise is going to be NVIDIA, Taiwan Semiconductor, Broadcom, Lam Research, ASML, Intel, and Texas Instruments, as well as Applied Materials and Advanced Micro Devices. Those are going to move it. All right, let's go to the next one. So, looking at the key holdings here of SMH is really very interesting. If I'm looking at total return, which again is price appreciation and dividends, NVIDIA is clearly the leader. Okay, and they're followed, I'd say, in a distant second by Broadcom, and this is just the 1 year. So 226% versus about 72.5%. And then everyone else is really way behind. Lam Research, about 54%, and then ASML, Intel, and Taiwan Semiconductor. You know, the reason why I want to mention Intel, they are in that top 5, but, you know, they've been struggling the last, I'd say, 15, 20 years. They have cut their dividend significantly by 67% last year, but they seem to be coming back little by little in 2023. So I think it's interesting and it's worth mentioning. And they are a key holding in this ETF. So that's the 1 year. You know what? How is this ETF rated? Well, the quant ratings, if you look at the numbers, this ETF rates very high. Out of a 5-point scale, they rate as a 4.87. And if you look at the factors that go into that rating, momentum, is an A plus. And really, that momentum is being driven by the investments in NVIDIA and in Broadcom and in Taiwan Semiconductor and AMD. Those are driving it. Expenses, not bad compared to its peers. Dividends, little better than its peers. Risk, D minus. But they're really all D minus. It's a volatile market sector. So if you invest in chips, you need to recognize that. You need to acknowledge it. Liquidity, all of these investments that are part of this ETF are cash rich. They are making money hand over fist. Those investors are betting on the future of artificial intelligence. And so they are buying. And if you look closely at each of these investments, you will see that some of these have very high PE ratios because they are investing in the future. All right, let's go on. So, what are some of the peers of SMH? Well, take a look. There are, looks like 5 of them. Invesco Semiconductors, the Spider S&P Semiconductor, the First Trust NASDAQ ETF, iShares Semiconductor ETF, and Invesco PHLX ETF. So really, there are a whole bunch of semiconductor related ETFs. And you'll notice that I threw in SPY, which is the very largest ETF out there that mirrors the S&P 500. Why did I do that? I did that because I want to drive home a couple of points. I want to drive home that these are all very small compared to the largest ETF out there. Let's look at the assets under management. So SMH is by far the largest semiconductor ETF out there, 9.7 billion. Several of the rest of them are in the millions or the several hundred millions or maybe $1 billion estimation, if you will. Maybe with the exception of SOX, which is the iShares Semiconductor ETF. They're at about 8.9 billion. But look at how small they are compared to SPY. SPY is the S&P 500 ETF, 413 billion. So we're talking about 40 times the size of SMH because that mirrors the entire market. That's where all of the money goes if you want to invest in the S&P 500. There's a handful of S&P 500 ETFs, but I'm just showing you the very largest one. Another thing to look at is the expense ratio. The expense ratio for SPY is 0.09%. The expense ratio for SMH is 0.35%. Some of them are even higher. Some of them are 0.35, some of them are 0.6%. So anyway, wanted to share that with you. But now that you know that scale can drive costs down, doesn't necessarily drive return up. Let's take a look at the return for 1 year. SMH is by far number one, 45%. What's number two? SOX, 36%. Then everyone else is less. Everyone else is less in that market sector for total return. But SPY, which is the S&P 500, 13%. Way, way, way back. So yes, you go higher with scale. You're not necessarily going to get a higher return. That's why you're paying a little bit more. Let's go to the next slide. Okay, let's take a comparison of price. SMH closed at $150. SOX, which I would say it's its closest competitor, almost $500 a share. So that is quite a bit pricier. All of the others are less, maybe with the exception of XSD. SPY, the S&P 500 ETF, $445 a share. So I'll tell you, SMH looks like a good buy to me right now when I'm looking at return and I'm looking at price. Let's look at the dividend yield. Well, I'll tell you, the dividend yields are modest for the most part in the semiconductor ETF market sector. Most of them are less than 1%. I would say that basically SOX is 0.93%, SOX Q 1%, and then SMH 0.8%. It's all kind of negligible. SPY, the S&P 500, 1.46%, which isn't great. It's kind of modest. But let's take a look at the growth rates. Let's look at the 5-year CAGR. 5-year CAGR for SMH is 11.46%. PSI, which is much smaller, about 30%, but has a much less smaller yield. XSD, smaller growth rate. FTXL, decent growth rate, but a smaller yield. SOX has a very nice 5-year CAGR. Okay, but you know what? You're going to pay a lot more for one share of that ETF. How are the consecutive years of dividend growth? None of them are great. SMH 2 years. All the others are 1 year except for SOX. SPY, the S&P 500, 13 years. So anyway, I'm laying it all out here for you. While I like SMH and I don't own it, okay, but I'm considering it, I do own several shares of Broadcom, but I'm considering it, and I'm also looking at Qualcomm. It's not perfect, but it's a decent ETF. When I look at it compared to the other ETFs, I would say SMH is in the pole position. That is my choice. That's the one I would buy, and I will probably buy it. Let's go to the next one. I'm looking at price performance. And, as a long term investor, I like to look at the 5 year, the 10-year time frame. 5 year time frame for SMH, 184%. And it is by far number one. SOX is number two at 167%. Let's look at the 10 year. 10 year for SMH, 683%. 10 year for SOX, 663%. All right, that's it. I've made my decision. I am going to buy shares of SMH. But you know what? Let's look at liquidity. Okay. And I did talk a little bit about this. Assets under management, 9.7 billion for SMH. SOX, 8.91 billion. So SOX is number two as far as scale. But compared to the S&P 500, 412 billion, they are small players in the ETF world. But remember, you're going to get a better return. It's going to be more volatile, but you're going to get more growth, very likely with SMH. And you can see the share price there again. I already covered that. I like to also look at the average daily share volume. You see that SMH is by far the most highly traded ETF of the other semiconductor ETFs, by far. And the number is there. And then, folks, that is it. So I do hope you found this to be informative and educational. And I'd ask you kindly to like our video and subscribe to our channel and share this video with a friend. You can also follow us on Twitter at DividendBlast99. We are also on Instagram at Dividend Blasters. And I wish you a wonderful day. Until our next video, God bless.